Hey everyone, thank you so much for joining the Behind Company Lines podcast. Today we have Daniel Naim, CEO and founder of Fennel. Fennel focuses on making shareholder voting easier for the everyday person and access ESG information about the company they invest in. Daniel, I'm so excited to chat with you, not only because of your founder journey, but also about what you're working on at Fennel, especially everyone in I think most people who are able to invest or getting into investing now is really paying a lot of attention to what companies are doing, not only from a product and company standpoint, but also from the sustainability and thinking about the different decisions they make outside of their organizations. It's amazing that Fennel allows this opportunity to get access to that information. But before we get into all that and all the great stuff with Fennel, what were you doing before you started the company?
Yeah. Hey, Julian. Great to be on here. Really excited to share what we're doing. So before the company, I actually wasn't in this space at all. I wasn't in finance. I was not in startup, never aspired to be at all. I was doing my physics PhD at Livermore. So I was doing dark matter research detection. So just briefly, we look at the galaxy. We know that there's missing matter. So we call it dark matter. I was just like focused on the mysteries of the universe. And then I was working at Livermore. Same technology overlapped with nuclear reactor monitoring. So how do we how can we tell how much plutonium is produced in other countries? Anyway, so like you can tell, not focused on this at all.
What was the catalyst? Or what got you into it?
Yeah. So during my physics PhD career, early on, I took this class called econophysics, which was essentially how do you take physics models and apply them to the stock market. And at the time, like I didn't really think anything of it. I had like an economics minor in my undergraduate, and I was just like, this is a great filler credit. Like maybe it's interesting, et cetera.
Right.
So I hopped into the class, took it. I never traded a stock in my life, never did any of that stuff. And I essentially got hooked. So like I really started to be fascinated. Like I started to create my own trading models to try to like see what signals I can look for in the stock market to try to trade better. And it's so funny because in dark matter, you're constantly looking for no signal. You never see anything. And the opposite was true in finance is like, I started to create trading signals and I can see other traders kind of looking at similar signals.
Yeah.
And that kind of hooked me in.
Yeah. Interesting. And for, I don't know if you have any specific signals, but what signals in particular, for those who don't know, that the traders are looking at is, I think we all probably just stare at the ticker and see where the line's going and predicting whether or not the line is going to go up or have an aggregate of that line going up. Some of us look at different pieces in terms of like the financial reports that we see, but what in particular are the other signals that we may not be aware of?
Yeah. So there's quite a few tools that Wall Street people use to discover what a company is doing and where they think it's going. They could look at different quotes on different exchanges or different orders of execution to see technical patterns of like, okay, I noticed that there's a crumbling quote here. I'm looking at the spread between what the bid and ask is, how often, what's the volume and liquidity of execution that I'm seeing at the time. So you can get really nuanced into like the book values, like what's going to be traded at what point. But more importantly, I think like systematically putting all these hundreds of data points rather than scrolling yourself and trying to find out, it's things like a factor lens model. So oftentimes you might hear on like CNBC or Bloomberg, people talking about, an overvalued stock or an undervalued stock or momentum or whatever, or quality. It's a high quality stock. Well, all of those essentially have like hundreds of fundamentals about the company stuffed into a system, and they compare them to all the other companies and they try to rank them. Right. Yeah. So it was a little bit of that. Like, how can you find undervalued stocks that are trading exponentially on that tick?
Yeah. And do different models that you were working with or experimenting with, do they incorporate different signals as variables and then they extract some kind of input? Is it a formula? And does each model kind of have differences in those signals, or are there other differences that define those models?
Yeah, there's quite a bit. So it gets quite complex. Like there are quite a few, they call them quants, quantitative traders on Wall Street. And a lot of these models are very like secretive as to what works and what they call alpha. So you're picking out a signal. But yeah, they're very different. So like my PhD is focused on what was called a principal component analysis. It's like where you take two different completely arbitrary inputs. So like, I don't know, price and ESG score, let's say, and you try to find a population of stocks or a population of something happening that falls within a confidence bound. So it's like, if something is ever outside of this range, there's a 95% chance that it's going to return back to equilibrium or something like that. So how do I isolate those and how do I find unique data sets?
Yeah.
Yeah.
And is that how Fennel started, or what in particular got you excited about the
No.
ESG motion of
No,
companies?
yeah. So that was not how Fennel started at all. So that was just kind of me like waking up and doing my models and trading. And I thought nothing more of it. But really what got Fennel started was I was approaching my graduation in the PhD career, and I was just wondering like what I wanted to do. I really enjoyed academia. A lot of it was money in politics, which I think exists everywhere, but I lived in the Bay Area and you couldn't really see the sun in some summer days.
Yeah.
And so we just had like a fifth season called like Fire.
Yeah.
And I just remember thinking like, okay, dark matter's cool, but like what am I going to look back on in 20 years of work and be like, oh, I worked on something that I actually cared about. And I knew that climate change was like this existential dread. And I knew that we weren't doing enough about it. And so I started to go down this rabbit hole of like, I found ESG, I found alternative data sets, and I was just like, oh, this is great and also horrible because the data quality is not great, but I know where it's going. And three things were happening in the world like around me that kind of led me to the light bulb moment of knowing that Fennel was a viable business or a solution like this had to exist. The first was there was a company like Tesla that was exploding in the stock market, and no one really cared about price to earnings or fundamentals.
Yeah.
It was a value play, right? A generation knew that a company like Tesla couldn't not exist in 20 years, right? It had to. And all of a sudden, domestic and international policy started to change. So you had California, New Jersey, Germany saying by 2035, we're only going to sell electric vehicles. And on top of that, Ford and GM and all these large companies started investing billions into the infrastructure around EV.
Yeah.
So clearly something went off in my head, like capital markets talk, right? They have massive influence to a large extent. The second thing that happened at the time was engine number one, which was this small hedge fund, had about $50 million assets under management, took on ExxonMobil in one of their shareholder meetings to take over 4 of the 12 board seats with the sole intent of reducing carbon emission. So their only mandate at Exxon was to reduce carbon emission, and they won. And they got the support from BlackRock and these major people, and they've been pushing for that internally over the past couple of years. And then the last thing was the GameStop movement. I think the GameStop movement, and when the meme stock craze happened, that really like lit the spark for me. And I saw how passionate a bunch of everyday people got together and decided to, unify under a single cause.
Yeah.
And I thought, great, we put all three of those things together. Our generation gives so much, we care so much about climate issues, social issues, all that stuff. Can you actually direct them towards public companies to get them to change for the better and faster?
Yeah. Yeah. And what was the incumbent prior? Obviously, there's some very clear examples, but what was the incumbent prior to be able to actually or feel that whatever you're trading in, whatever shares you had, actually had an impact in your day-to-day life? And only because I know very few investors who say, well, I drink Coke, so I might as well buy Coke stock, or I use Apple products, might as well buy Apple stocks. But what was the decision making prior to that? Was it simply just looking at trade volumes and seeing what values are increasing over time? How were
you for me?
For general users? Yeah, for general users. Yeah. How are they connected to this?
Yeah, that was it. I mean, like the products out there in the market right now really don't tell you what a company stands for. Yeah. They really just put a price chart in front of you and expect you to make a decision on that, or like a price to earnings number, a fundamental that has no context, no relevant information. And on top of that, their business models are very conflicted with their user. So they participate in things like payment for order flow. So they just want you to trade. They make more money the more you trade. And when you just see a screen of like a price, that's what you're going to trade on. You're going to trade more frequently. Markets are very volatile. So like there are no tools out there, in my opinion, that are accessible that show this level of impact of a company, right? Like you make these decisions based on a product. You spend so much time trying to buy certain products based on, is it sustainable? What's the quality like? What's the price point?
Right.
It would only make sense we do the same with the companies we invest our money in. Right.
Yeah. Yeah. You mentioned the data, the ESG data that was available, and what was the quality of that data? And what I mean by is how well was it labeled? How well is it indexed? How much information can you actually gather? And how accurate is it in terms of what companies are doing as a fundamental, I guess, a priority of theirs?
Yeah. So what I can say about that is like, it really does depend on the industry. It depends on the company. It depends, right? That's like that's not a great answer, but let me just try to pull out some of the like details around it,
Sure,
right? So let
sure.
me try to pull out what I can pull out about that. So it really depends on what the company wants to share with the world.
Yeah,
Okay.
yeah.
So a lot of this falls on the company's hands. There are a lot of alternative data sets that look at HR stuff to understand the employee breakdown, female versus male. Some companies choose to report on these ESG metrics in their SEC filings or their quarterly or yearly ESG scores. And because they're submitted to the SEC, like they are mandated to be fairly accurate.
Sure.
Also, the SEC right now has come out with a like carbon disclosure rule saying that if you're a public company, you have to accurately report on your carbon emission, which is a great initiative. And they passed that last year. So I think that's going to help tremendously. But over time, it really is going to be the government's like mandate to step in and make sure that these public companies disclose more things.
Yeah.
Because when you think about climate, when you think about social issues, they are risks to the business. You look at what's happening this week in the financial sector, that's a governance risk, right?
Yeah.
So if you don't understand the governance risk behind a bank or something like that, there is inherent investor risk.
Right.
And so it really is up to the government to mandate these companies to disclose this stuff. And then us, like I said, like, so I'm physics PhD and we have a bunch of physics PhDs on the team. And we have went through the data sets and made sure that we're only showing the highest quality data and we're sourcing from multiple places.
Yeah.
And we're kind of doing the job so people can see it. Now, just one step back, what people had before was nothing.
Yeah.
Okay. So let's say I'm Jewish, Christian, Muslim. I don't want to invest in pork products, abortifacients, anything like that. People couldn't even find that out without having to pay a manager 1% of their portfolio, right? And I didn't think that that's necessarily the most fair. So what we're doing at Fennel is we're showing over 200 metrics. We're not just showing the score. We're showing you the underlying metrics. So what is the pay gap between men and women at this company? What is the carbon emission? What's the CEO pay to the average employee, et cetera, right? I believe that those values actually need to be understood.
Yeah. Yeah. I mean, I could see working within companies, now and the different decisions as a founder, those are so important to the culture of the company and also how they view their customer as well. And in that relationship, and it's becoming more and more, I think, critical for people who are investing to know what the decisions are. And I guess in your opinion or in your experience, what have you seen, I guess, more recently with companies and how are they shifting from the old model, whether it's the leadership that they hire, the decisions that they make, or how they roll out products? What have these companies do more and more popularly nowadays that they hadn't been doing in terms of ESG?
The tongue-in-cheek answer is greenwashing.
Yes.
Right. All the companies love to put all these PR like outlets of like cows, happy cows and green grass and we're sustainable and look at our car on the beach cleaning up recycling.
Yeah.
But I don't think I think that's a whole separate issue. But one thing to note is like they are hiring staff around diversity. I mean, I think like literally today, Nike was announced that they are hiring, they hired a chief diversity officer and chief DEI, right? So they're starting to put in more systematic procedures for diversity, equity, and inclusion. They're starting to brand and move away from nothing, like they want to make stuff more recyclable. That's better advertisement for them. As the millennial and Gen Z generations grow, their purchasing power in the economy is going to grow. And if you're not a company that's anticipating that and creating products and doing stuff, you're kind of going to be dead in the water.
Yeah.
So the forward-looking companies are already starting to account for that by the way they hire. And also, by the way, the ones that probably address for issues like diversity, equity, and inclusion are going to get better talent too.
Yeah.
Right?
Yeah.
Wouldn't you want to invest in? Yeah. So there's all these like little things you can see that public companies are doing. But I think personally, the most important is disclosure. Disclosure. Share what you're actually doing, not in a format that's a public, like a PR response, but file it to the SEC and say, this is what we're disclosing. And what I love so much about shareholder voting is like, you look at all the votes that public companies put in place right now, and they're all centered on those issues. It's like, should Apple report on its forced labor? Should Microsoft report on gender pay gap disparity? Right? Yeah.
And how, in just the reporting thing is extremely interesting. Also in regards to the voting, how, I don't know if you have a percentage here, but how many
Yeah.
shareholders are missing out on voting or are not electing to vote or not having time to vote? Like how many
Yeah.
people are missing on that opportunity and how many companies are just making decisions on the minority
Yeah.
of the shareholders, or I guess those who have the attention span or the time to actually vote?
Yeah. Yeah. I mean, look, I think living in a capitalist system is fine as long as it's democratic, right?
Yeah.
And I think a lot of people have these investments and they're giving up influence and they're giving up power. So something like less than 30% of people are taking advantage of their shares. And why I think that's like really problematic. And I'll talk a little bit about why I think like it's really not their fault.
Sure.
Right. And I'll talk about how Fennel, like we're trying to help them. Um, it's not their fault because what ends up happening is, and what's really key to us and why we built a brokerage firm is that most brokers will lend out your securities. Okay. So those familiar maybe in this space might know that. Sometimes they'll give a kickback to the investor, but what they do is brokers operate in the same way that banks do. So banks have your cash in reserve and they lend it out and they invest and they do all the stuff. Brokers do the same thing, but with, rather than it being fiat currency, without it being dollars, it's your stock certificate. And so some people will want to borrow the stock to short it, to bring the price down, or some people will want to borrow it to vote. So it turns out when you lend out your share, the vote follows the share.
Yeah.
So you can sell the right to vote. And if you look at the record date, the date you need to hold the share in order to participate in the vote, the amount of interest on people borrowing it shoots up.
Yeah.
And most retail brokerage firms, when you sign up for a margin account, you will also commit to like what's called a fully paid securities lending program, which is just like the ability to, you're giving your broker the ability to lend out your shares. And so likely your shares are lent out. And so likely your vote doesn't even count right now when you vote. You break that down even further. It's majority high net worth individuals that are doing the participation. You can break it down by zip code and see where they're voting from. And it's always the high net worth zip codes that are more participating in these votes. So you should just start to think like, okay, this is where the influence is. This is where I need to get involved. Now let me tell you like why I think it's really not the everyday person's fault. One is these companies keep this stuff on hush. They don't want to talk about it. If a vote ever comes to fruition, it's because the public company didn't want to enact those changes in the first place. The process is an NGO, an activist investor will come to the company and say, I think you should disclose how much you pay men versus women. And the company will fight them for a year, 2 years. They'll even go to the SEC and say, we don't think that they should put this vote forward. We think X, Y, Z. The SEC will rule in and say, no, it's allowed.
Yeah.
The vote will come forward and always the company doesn't want it to pass, right? Because it might hurt margins, it might hurt profitability, even though that's not necessarily true. What ends up happening is all these large financial institutions are the ones that are deciding the vote. So large ETF managers, fund managers, people that are borrowing everyday people's shares dictate the votes. So none of them pass.
Yeah.
Right. Just the last thing I want to say here, all these institutions have voting policies. So they have automatic voting. The problem with votes is like, it's 50 pages, 10-point font. You get it in the mail. What do you do? You toss it in the trash. You're not going to read all these. You're not going to do it. The institutions don't even do it. They hire teams to do that. So what they end up doing is they sign up for a policy. And so that's what we want to do at Fennel is like sign people up for a policy that says, look, I care about climate. So every time there's a climate vote, vote me in favor of positive climate change, right?
Yeah.
And we want to actually put the votes on the platform directly there, show the data, show the breakdowns, do all that stuff.
Yeah. Well, I think and incredible, not only the amount of data and the amount of undervoting that happens, but just the ease of opting into, say, an automatic voting pattern, which allows me to still feel carefree in terms of putting my money somewhere and allowing it to grow with a company that I truly feel is going to benefit me in the right direction and benefit the globe. And I'm in line with that vision. Tell us a little bit about the traction. How many people are on Fennel now? What are you excited about in terms of the REPA growth, but what are you particularly excited about this year and the coming growth that you'll see?
Yeah, so we've been working on this for like 2.5 years now. Countless engineers, like tens of engineers have been working on this. Like you can imagine the vast amounts of data we'd have to put all under one place. So we actually just launched the product a month ago. So we have some like alpha, early beta users on right now.
Yeah.
every month for the next 2-3 months, we're going to keep onboarding more people. And we have thousands on the wait list. So we have several thousands on the wait list. And that list continues to grow month over month at an accelerated pace. We haven't really made a large effort to make ourselves vocal. And I think we are going to be doing so over the next few months. So hopefully people will like see us more.
Yeah.
And I think this is probably the most excited stage I'm at right now, is like, yeah, just going out into the world.
Yeah. Yeah. I love that. What are some of the biggest challenges that you see that you face today?
Yeah. So I think that the biggest challenge is going to be education and awareness, right? How do we help people really understand, like, how do we help them understand their power, and how do we help them understand the data and to act up the data?
Yeah. If everything goes well, what's the long-term vision for Fennel?
The long-term vision for Fennel is monopoly. No, I'm kidding. The long-term vision for Fennel is, I genuinely think that like public companies need to listen to their investors a lot more.
Yeah.
So the long-term vision for Fennel is like every person can start to put these shareholder votes forward to companies. Everyday people can tell the large public companies, this is what I think you should do from an ESG perspective or a financial perspective. And to give the public companies an easy way to talk to their retail investors, right? So you don't have to have all this like middle management in finance doing the talking for the clients, holding the influence. Like, I really think build the tools that make self-management easier and let the fire grow.
Yeah. Yeah. I love that. I love this next question. I call it my founder FAQ. So I'm going to hit you with some rapid fire questions and we'll see where we get it. First question is, what's particularly hard about your job?
Particularly hard about my job is keeping cool.
Yeah.
Constantly staying calm, constantly understanding that there's a light at the end of the tunnel.
Yeah.
And knowing that everyone that's working with you has the best intention. You have conflicting interests.
Yeah. For other founders coming out of, say, non-business or backgrounds, say, coming from the academic realm, who want to go into entrepreneurship or who have a problem that they really care to solve, what advice would you give them? What would be helpful for their transition to be smooth into, or as smooth as possible, into starting a company and maybe building a team around them?
Don't overthink it. Don't create a product. You can't build a business off of just like a product. You have to think big. Really get bigger than just narrowing it down to a single. And don't wait. You're not going to find the perfect area on the thing that you want to work on and everything falls into place. And like you're going to wake up every morning being like, should I do this? Should I not? You're going to have the highs, you're going to have the lows, but just do it.
Yeah. What's something that you find yourself spending more time on than you expected to when you first started your journey?
I think this ties into the first question, which is like talking to people, right? So like making sure everyone is unified on the vision, making sure everyone understands like what we are all after, right? And just like making sure they never lose sight of that.
Yeah. Agreed. What's one way that you found helpful in terms of gaining a network of other founders or other individuals building that you can lean on, or mentors you can lean on for advice when you're in critical situations or just need a conversation to brainstorm?
Yeah. So it's been harder with COVID, I will say, especially like having started in the Bay Area, like it's night and day between the two.
Sure.
But there are a lot of social, like Slack channels, et cetera, that you can join and kind of see what people are doing. But, personally, what helped me the most is finding credible advisors that really care about what you're doing. And these are people that are in your network. So like for me, my first advisor was the econophysics professor at Davis.
Yeah.
And Professor John Rundle, if you're listening, shout out to you. And he had a bunch of different people that he put me in contact with. And every time you meet one of these people that just like understands or you feel like you can learn from, ask them to be an advisor, right? And just talk to them.
Yeah. The conversation piece and extracting that. A lot of people feel that they need to hide their ideas, but it's counterintuitive to actually moving forward in so many different ways that people don't, I think, consider when they're thinking about building a community around them. What's a piece of advice that you would give founders? Something that maybe you know now, but something that you've learned now, but you wish you knew earlier in your career?
Yeah, I guess that it's like it's never going to be perfect, right? So don't try to make something completely perfect. Definitely don't control the situation. When you hire someone and you keep someone on your team and they're on your team and on your side, trust them.
Yeah.
Right? Give them more autonomy, let them in, because you're not going to be able to do all of this alone.
Yeah. Yeah. In relation to that question, where do you find good people?
Yeah, that's everywhere.
Yeah.
Good people are everywhere, right?
Yeah.
And you'd be surprised, like just talking about what you care about rather than just talking about the product and talking about the company and keeping it boring, that'll help you find the good people better.
Yeah.
Right. So use that as a filter, use your passion, talk to people that share similar passion.
Yeah. What's the way in terms of Fennel? What's your business model? How do you make money? What are ways that we can know a little bit more about the inner mechanics of the company and how you're able to not only give us insights and data, but also allow us the ability to vote and trade and things like that?
Yeah. So the way we make money, it's a strong policy internally that we believe that the customers are not the product.
Yeah.
So a lot of these other applications, they treat you like the product. They sell your financial orders. They sell. We never do any of that stuff. So we just charge subscription.
Yeah.
We believe that we want to be completely transparent with you. We have no conflicts of interest. The only money that we're making is the money that you're giving us, right?
Amazing. Yeah.
So that's kind of how we focus on revenue internally.
I would like to ask this next question because I love how founders extract knowledge out of anything that they ingest, but whether it's early in your career or now, what books or people have influenced you the most?
Yeah. So when I was first trying to do the startup, again, this was recommended to me by my advisor. I think it was called like The Art of the Start, something like that. Yeah. That was one that just basically gave me like a superficial 50,000 overview of like all the stuff to look out for, all the stuff to be careful for. And you think that they're all going to come all at the same time. And like, that's not the case. I'm still only now discovering some stuff later. So that was very good for me. And then I listened to a bunch of Harvard Business Review audio books, like when I was in the lab working or when I was doing whatever it might be, I would just listen to Harvard Business Review books, and that helped me learn quite a bit.
That's incredible. And I always like to ask a question. I know we're coming to the end of the show, but before we go to your plugs and your LinkedIns and your websites, is there any question I didn't ask you that I should have or that you would have liked to answer?
No, I think you've done like a really good job. I think I've talked about the ESG. I've talked about the shareholder voting. I've talked about my journey, and yeah.
Amazing. Well, Daniel, I'm so excited to share this with our audience, but please let us know where we can find you, where we can find not only Fennel, the company and the technology and get involved with it, but also you as a founder. Where can we support you? Give us your LinkedIn's, your websites, all your plugs. Go.
Yeah. So where you can find me personally, I spend a lot of my time on LinkedIn. So please reach out to me there. I'm always available. I love talking to people. LinkedIn is just Daniel Naim. You could search me on there. N as in Nancy, AIM as in Mary. I also have a Instagram, which I'm not the best on Instagram, but I try to post when I can. I try to be cute with it. It's just Daniel W. Naim, my last name. So that's where you can find me. And then you can find the company also on Instagram and LinkedIn and all the stuff. We're just called Fennel. On Instagram, we're called Fennel.app. We have a lot of cute and fun content we're going to start pushing out recently. So follow us and keep up to date there. And then on LinkedIn as well, just search Fennel. It's a financial company.
Amazing. Daniel, it's so exciting not only learning about your founder journey, coming from physics and something that was extremely theoretical, it's just something that's extremely practical and that a lot of users and a lot of people who are investing, I think are really looking forward to, which is knowing more about the companies that we're working with and knowing more about ways that our vote and our power can actually be used and utilized into helping them make better decisions. So I'm excited to share this with the audience, but I really hope you enjoyed yourself and thank you so much for being on the show today.
Thank you, Julian. It's been a pleasure.